Your next slide, I believe, is the US dollar. So for all our currency viewers, this has been maybe one of the hatest trends in town for such a long time, because it's just been moving lower all that time. But certain early stage resurgence of a bull reversal. What's your view in the larger scheme of things?
Well, this chart compares the US dollar index to a 52-week Schumpeter momentum oscillator. That's very similar to an RSI indicator. And what we've got is these vertical green lines here. And they occur when the indicator bottoms out from a position that's below that green horizontal line. And you can see that some of the vertical lines are in green, and they're followed by a nice rally. And some of them are in red, and they're dashed, and they're not followed by such a good rally. Well, those are, again, are bear market rallies, bear market signals. And when you get a bullish signal that occurs in an environment when the market's coming down or when the dollar's coming down, you don't get such a good response from the indicator. So the point of showing the indicator is that it has turned around. It's no longer below. It's just slightly above that green line. So it's given us another signal. And the dollar itself is broken above that green downtrend line and above the red line marking the bottom of the head and shoulders top. In other words, that breakdown looks like it was a whipsaw. One of the other things, one final point, sorry, Ron, is that the signals that don't work have all occurred when the dollar index is below its 52-week moving average. That's that dashed line. And right now it's below that dashed line. So we're going to have to wait and see. But it does look interesting that the dollar may have reversed at this point to be a bull market. But we're going to have to wait and see. We need a bit more evidence, because the bull market lasts a fairly long period, and we're going to need a fair amount of period of time to get that to have enough evidence to conclude that.
And do you see, I mean, in terms of the potential tightening policy from the Fed, and rising rates potentially 3-4 times this year, but also another flash crash event later on, perhaps, either one of those components adding more fuel to the dollar rally?
When you do an analysis of what influences the dollar, you don't see rises and falls in interest rates as being a big influence. What's a bigger influence actually is the differential in rates between the US and, we'll say, the euro rates or the Japanese rates. That's a more important influence.
Okay, and in terms of volatility in general, there's been a lot of concern that the dollar maybe hasn't been playing out as that safe haven currency that most have known it for such a long time. Do you see that relationship returning maybe sometime in the near future?
I don't have a view on that.
Okay, thank you very much, Martin. And just as a lasting note, of course, we're looking forward to welcoming you to IFTA 2018 in Kuala Lumpur, Malaysia. What can you say for those who are looking forward to your presentation and for meeting you in person later on this year in October, 26th, 28th of October?
Well, I'm very much looking forward to it. I haven't been there for a number of years, and looking forward to getting reacquainted with Malaysia again. And I'll be talking a little bit about the business cycle and the chronological sequence that we talked about in the first slide, and how that influences sector rotation around a business cycle.
Thank you very much, Martin, for joining us today on our SAMT interview.
Thank you, Ron.
And that's it from myself, Ron William, Vice Chair and Head of the Geneva chapter of SAMT, in partnership with Dukascopy. We look forward to seeing you the next time.